Hello guys, this is fairbinaryoptions.com, and we are looking at a market that is surprising to say the least. As you can see, this is the Great Britain pound US dollar, and while on Friday, look at this almost vertical line to the downside. So while on Friday price made so aggressively such a move to the downside, then Monday comes and just like that we are threatening the highs. Not because of that, but if you go on the bigger time frames, I'm talking about a bullish case scenario. This is being called the running variation of a contracting triangle. So if you zoom out a bit, and therefore I would like to buy some call options with end of week expiration date by the time the highs are going to be broken. You might say, well, they are too far, price is too far from that area. Well, it doesn't really matter. This week is a week that is going to be extremely volatile, in the sense that we are going to have the FOMC Federal Open Market Committee to come. It's Wednesday, and therefore ample moves are not out of the questions. What I'm looking for this triangle is to evolve or to travel between the following lines. This to be called wave A, this to be a B wave to the upside. So all of a sudden, because you see the B wave is bigger than wave A, you are thinking of a possible irregular triangle or a running variation of a contracting triangle. This to be the C wave here, A, B, C, and just like that, the D wave making a new high. So what next? Well, if those new highs are going to be broken again, then hands down, I'm going to buy it aggressively. But again, end of week expiration date, and then we'll build things step by step. This is being called a running variation of a contracting triangle. It is a powerful pattern, and it is being traveling between the A and C and the B to D trend lines like this. And normally by the time price is coming and breaks these highs, it implies that the previous wave should be a third wave and this a fourth wave. It may be an A and a B, but usually it comes in the form of a third wave of a bigger degree. That should be either here or here, it doesn't really matter. Then of course a fourth wave of the same degree to be done here. And because of the term running appears there in discussion, so a running variation of a contracting triangle implies that the fourth wave will actually not even correct the third wave. As you can see, fourth wave ends above the previous third wave. So A, B, C, D, E, running variation of a contracting triangle, we're looking to buy for some strength. This comes with a measured move. This comes with strong bullish conditions if the highs there are going to be taken. And therefore, what I would like to do and what we recommend here on fairbinaryoptions.com is to buy call options by the time price is breaking these highs with end of week expiration. You might say, well, it's almost 100 pips higher. It doesn't matter. When price is going to that area and you see that the Great Britain pound US dollar is making a new high, then that would be the thing to consider, to go long or to buy call options in our case, because we are trading binary options. So that would be our confirmation that the fifth wave started. So buying call options with end of week expiration date. So even if price goes and breaks those highs, let's say on Friday, it doesn't matter. We are buying call options end of week expiration date, end of day expiration date on Friday, 21 GMT by the time the equity markets in the United States are going to be closed. Thank you very much for being here. This is fairbinaryoptions.com. Possible running variation of a contracting triangle on the market, and therefore we would like to buy the break of the highs there.